You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Shayne Nyquvest, Executive Vice President of Mackey Research. You can find it online at MackeyResearch.com. Shayne, you're going to be shorting the Canadian banks. Why would you do that?
Well, for a combination of reasons. Thanks for having me on, by the way, Jim. Good to hear from you. Not the least of which is conflict of interest that continues to carry on. You know, once again, at the heart of the problem is the Bank Act of 1933, Glass-Steagall, which was brought in after the Depression to counteract the fact that banks should not own brokerage firms, insurance companies, rating agencies, and trust companies. That was repealed in 1985 by Reagan, and we entered the period of deregulation. We then went into the asset-backed disaster in 2008, $5 trillion real estate loss brought on by conflicted banks and brokerage firms who commingled their products to the decimation of their clients. In fact, to add insult to injury, they even shorted against it. I think there's a movie out now called The Big Short that will remind you vividly of what it is. Anyway, we're now into the Canadian banking scenario. And as an example, if you've got a Canadian bank with a huge loan portfolio and their brokerage arm is looking at financing one of several oil and gas companies that are all underwater at this point, which one do you think they'll finance? They'll finance the one that their bank is owed money to, not necessarily the best one. So once again, the conflicts and problems with that continue to add to the $44 billion is the number now in ETFs. Most people don't know what an ETF is. An ETF is a bank product created with a high commission. They sell managed money at 1% and have all kinds of conflicted products in there that they make far more in fees on that. You've got 30 industries in Canada. There's only one industry making money, and it's called the financials. Now, how is that possible, you ask? Very simply, they steal money from their clients. They've decimated the independent brokers by owning an organization called IROC, or controlling it, which inflates costs of operation to a ridiculous degree. It precludes investment capital from coming into the system. There's 15 pages of ridiculous documents to sign, whereas you can, I sold a house the other day. You can sell a $3 million house with 2 signatures from a real estate agent who's been licensed for 3 months. And nobody asks you for a disclaimer or evaluation or any kind of guarantee. But in the investment business, for a $10,000 investment in what you know is a speculative venture, you're forced to go through all kinds of regulatory unnecessity, constant audits, and costs that make it prohibitive. We're now down to 7 investment dealers in Western Canada, on our way to 3. Big banks are the cause of the problem. Their conflicts of interest and their inevitable demise is at the heart of the problem, which is why we are shorting Canadian banks. When and how the next disaster is coming, I don't know, but it's well on the way now, probably initiated or fueled by low oil prices and overpriced real estate.
We just saw another prediction that Vancouver and Toronto real estate prices would go up again this year, not at the same rate they did last year, but still go up 5 to 7%. Do you feel that's unsustainable?
I think it's absolutely unsustainable. If China or, the U.S. dollars gain 40%, so there's U.S. buyers coming in. But if China put a hold on some of their illicit funds coming out of their country, it would bring a fast end to it. And again, just go back to the U.S. real estate crisis. How it happened, why it happened, and it's no different and is happening all over again for round 2 here in Canada. The U.S. gets a cold, we get pneumonia. My son's 30 years old. For him to go and buy a house is virtually impossible. And maintaining and sustaining those prices is also there will be a correction. I don't know how bad and how long it'll be. Hopefully it won't be like the U.S., which ended up as $5 trillion, a loss of 6 million jobs, and 5 million people lose their houses. At which point the bank just, glosses it over, prints another $10 trillion, and, once again, the public and the hardworking American or Canadian pays the brunt of the greed brought on inevitably. The Bank Act was brought in to protect humans from themselves. The 4 pillars of the economy, separating them, making them autonomous and not conflicted, was the result of the Depression in 1929. Now we're going to do it all over again. We've already had one disaster and the next one's in the making. Exchanges should exist basically to exchange shares in companies that people want to invest in because they create jobs and are good for the national economy. Everything else, ETFs, derivatives, all the rest of the names that they come up with to sell conflicted products to their own clients at their expense, is academic.
What are your thoughts on private equity investing and mutual funds?
Well, I think mutual funds, which were the scourge of the industry in the early 80s, are what they use to hide ETFs and a variety of other products and create the fees that are driving bank earnings. I would appeal to every 30-year-old future of this country graduate who's going to work at a bank. Banks don't want brokers or anybody that thinks for themselves. They want tellers who bring money in and tell them what they can sell, and most of them are their own conflicted products. The new broker, if you will, whose payout is going from 45% to 18%, is afraid to leave, and his client is tied to that bank because his mortgage is there, his insurance is there, and he's, basically owned and controlled by the bank. He just pays fees.
The TV ads say they're independent.
They're certainly not. Who's independent? Banks?
Well, you see the
Banks
ads
are
saying, come on in and talk over your future with our independent advisors.
Independent. Independent means you pick the best of the best and you buy that stock. There is a list of qualified buys that you can do as a broker or teller at a bank, and it certainly doesn't include other banks' products. And it's a conflicted, full of ETF and bank-owned product that has got a way more than a 1% commission on it. And when the CRM disclosure comes out here sometime in March, I believe, that actually forces them to declare exactly what their fee structure is, that'll happen. And that'll probably be the first shot that these banks will take. And if people continue to stay there and pay these fees, they're going to continue to lose money at the hands of the guys that are supposed to be helping them.
Well, I know they talked about negative interest rates possibly coming to North America. And I said, well, if you look at the high fees that you pay on the average account, you're already paying the bank to hold your money, let alone formally call it a negative interest rate.
The mindset out there at the moment is frozen in fear. Just let me lose a little investing. Now, mostly, the velocity of money is what's missing. People are holding their money like they'll never make another dollar, buying overpriced real estate, buying products that are created by the bank that they think are independent. They're not independent, and the next disaster's in the making.
Has the creation of ETFs had an effect on the junior markets in Canada?
The effect is that banks are Pac-Manning and gobbling all of the money out there, controlling it, manipulating it, and deploying it in areas that are self-serving. So to answer the question, without a question or without a doubt, is that happening?
Is it a negative influence? And if it is, what's the solution?
Well, the solution, again, is to repeal the Glass-Steagall Act and the Bank Act, and banks should not own brokerage firms, insurance companies. Let me tell you why it was brought in to begin with. It was enacted as an emergency response to the failure of nearly 5,000 banks during the Great Depression. The act was originally part of the Franklin Roosevelt New Deal program and became a permanent measure in 1945. It gave tighter regulation of national banks to the Federal Reserve, prohibited bank sales of securities, and created the Federal Deposit Insurance Corporation, which insures bank deposits with a pool of money appropriated from banks. Now it is a convoluted, conflicted mess.
Why are governments so reluctant to bring back regulations like Glass-Steagall that separated commercial banks and the risk-taking banks?
Well, because of probably conflicted and greed, and politics is a dirty business as well. So who finances politics? Big money. Who's big money? Big banks. They're not going to bite the hand that feeds them. But they're going to drive us into a recession, depression, maybe a war, and that's what it took in order to bring it in 1945.
The Canadian dollar has dropped significantly. Is this good or bad for the junior markets?
Well, if you're a Canadian oil and gas producer, at least you're selling in U.S. funds, so that's probably a good thing. But, again, the biggest problem is conflicts of interest and, a set of regulations that have been brought in. There is no interest in fixing any of the problems. To fix the TSX venture would take about 30 days. And the way to fix it is crystal clear. And it has been pointed out for 2 years. There's no point in meeting with these people. They will soon be voted out of government. And there's no point in carrying on with any more conversation because their plan is working perfectly. They have no interest in changing anything because it is driving independence out of the business and allowing banks to consolidate the entire financial industry. So why would you fix a plan that's working? They have index pensions, parachute salaries, and a complacent government that is, in a line with big banks in accomplishing the mission. Until that changes, it's a waste of breath. Whether you bring in crowdfunding, great, probably have a 90% failure rate, but bring it in, if there's a way to, the whole purpose of the investment industry was to finance companies that would create jobs, not to get fees on transactions, not to create derivative products that are conflicted and self-serving. It's a simple process made difficult and confusing in order to, tap people of their money. They don't create anything. Who's going to finance the next 20% of the TSX 300? Big banks don't go down the food chain long enough. Governments, there should be capital gains and incentives to create these industries and help them grow. They're absent at this point. Fixing the TSX venture is a simple process. Should be owned by the members, should have some independent bodies on it. They should bring in an uptick rule, which is basically just illegal shorting. High velocity trading is what banks do. They collapse markets. They destroy, companies and prevent them from being able to raise money, which is counterproductive to what they should exist for to begin with.
Is the regulatory environment different for senior exchange listed stocks versus the junior exchange listed stocks?
Well, senior stocks with their record of earnings and historical growth, Canadian Tire, Tim Hortons, are mature companies that will probably require, more extensive listing. Venture companies who are well advertised as venture companies do not need to file excessive regulatory costs. That the exchanges allow them to raise small amounts of money, which in essence is enough to pay their fees and pay their salaries. It's not enough to do any good in terms of building a business. But all they'll do is put themselves out of business and bankrupt an exchange, and then they'll be gone. And somebody else will pick up the ball and deal with them. And that's obviously, after 2 years of putting together the group of 8 and trying to get concessions to help The only thing that's been accomplished is the rights issue's been shortened. And the rest of the regulatory burden keeps increasing every day, not decreasing. You can go to a casino, you can buy a $3 million house, you can do whatever you want, but try and buy a venture company which may create a whole pile of jobs and help propel growth is taboo. Are you kidding me? It's a plan that is working perfectly at the hands of big banks.
What needs to be done to save independent investment houses from extinction?
Well, reinstating the Bank Act is probably step one. From a long-term macro big picture. Step two, take the TSX venture. We'll buy it for $1 because it's probably overpriced at that point. When I say we, I say the independents who are going to run it or who should run it, and not for profit, just as a medium of exchange. Eliminate the uptick rule, get some government incentives for investing in new businesses, and you're off to the races. Not a complicated procedure. But white papers and whitewash papers that they're creating and meetings that accomplish nothing because they're counterproductive to what their overall business plan is a waste of time. We'll just have to let the shoe fall, let the pieces fall where they may, and then hope to build it on from there.
We've heard that excessive regulations have turned the junior markets into a police state. Your thoughts on that?
Well, at this point, there's nothing to police. 90% of all the listings out there are either out of money or will be out of money in the next year, which what they don't realize, there'll be nothing to regulate and no fees to garner. So the TSX will be a bankrupt, eliminated entity and the worst performing market in the entire world, which used to be the venture capital market of the world. Pretty sad.
With the stroke of a pen, could the junior markets be back on their feet again and creating jobs?
If anybody actually really wanted to save it, they would, yes. Be a simple process. But it might inflict competition to banks, and they don't want that. They just want to Pac-Man the industry, sell conflicted products, and wait for the next disaster to happen.
I was going to say, Shayne, if there is a disaster, they have buy-ins now. The people who have money in the bank are the ones that pay for the bank's mistake.
Sure they are. The public pays. Taxpayer pays. And a few greedy people at the top of the food chain make a bunch of money, create nothing, and live like the parasites that they are.
Has the government responded at all to your requests to help clean up this mess?
No, but it doesn't really matter. They'll be gone this year anyway. Christy Clark and Michael de Jong, they've spent $1 billion on LNG products that are useless and have ignored an $800 million mining business that's now disappeared. They haven't been to one meeting and have no interest because they're aligned with the banks and have no interest in changing or fixing that problem. So until they're gone, the problem will continue.
Has the NDP said they'd be, looking forward or willing to make changes?
Well, anything would be better than what we've got at the moment. So anybody that will listen to common sense and apply it and not be in cahoots with a bunch of banks trying to consolidate an industry would be better than what we have now.
Do you really think people in BC would buy that?
Well, you got an NDP government in Alberta at the moment, and believe me, they didn't create the mess. So when people have had enough and change is the only thing that is obvious, they'll do whatever is necessary to get rid of the problem and try and rebuild. The U.S. economy's been rebuilt since the disaster 6 years ago, and their economy and their influence in the world is improving. They still haven't fixed the problem, which is banks owning insurance companies, brokerage firms, and rating agencies. And until you fix that problem, catastrophes will continue to happen regularly. So many examples. A bank conspiracy is not some cloak and dagger fantasy at the moment. It's a well-documented fact.
Shayne, what can people do if they feel that the regulations need to be changed?
Vote all of these clowns out of there and move on to somebody that might actually have their best interest at heart.
Shayne, is there a website people can go to find out more about these issues?
Donnie Mosier's website, Small Miners Association, IAC is an organization that is too little too late at the moment. There's a big whitewash meeting coming up here on the 28th. You're welcome to come to that, but it's really the horse is out of the barn at this point. There's not much they're going to do to fix it other than resign their seats and move on to somebody that will.
Shayne, thanks a lot for chatting with us.
My pleasure. I hope, we all survive it and come back to better morals and ethical operation.
My guest has been Shayne Nyquvest, Executive President of Mackey Research. You can find them online at mackeyresearch.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.